UnitedHealth.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
From the other law attorneys at Cushing & Dolan, here's something you need to hear. Most people think long-term care planning is something they'll get to someday, until suddenly someday is today. When a spouse or parent needs nursing home care and no planning was done, the costs can be overwhelming. Cushing & Dolan are elder law and estate planning attorneys who help New England families protect their homes, savings, and retirement, even when a health crisis comes out of nowhere. They've just released a new guide called Long-Term Care Planning for Procrastinators. It explains what options may still be available and what steps you should take before writing that first check to a nursing home. If you've been putting this off, or a loved one needs care right now, time matters. Call Cushing & Dolan today at 866-848-5699 to get your free guide. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled How to Apply for Social Security and Medicare. Mike, one of the many questions that people have as it relates to Social Security and Medicare is, what's the difference in terms of how much I earn based on when I apply?
Yeah, and there's plenty of confusion around all of this because the ages have changed over the years as we've made reforms to the Social Security program, and there's different ages for Medicare and Social Security. So first things first, for vast majority of folks now, 67 is the current full retirement age for Social Security, whereas 65 is the eligibility age for Medicare, and then you scale up or down your benefits depending on how much earlier or later you claim when it comes to Social Security.
An important thing to note, you don't have a do-over on this. Basically, when you claim Social Security, that is what you are locking yourself into. The programs where you used to be able to adjust that, they haven't been around for a while now.
No, and so, for example, if you end up claiming your benefit at 62, in addition to having penalties for how much you get in earned income, you're going to be collecting about 30% less than your full retirement benefit, whereas if you wait all the way until age 70, you'll be collecting about 124% of that full retirement age benefit.
Our guide is titled How to Apply for Social Security and Medicare, and there are two ways that you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That number again is 800-393-4001, or you can request it at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning. Welcome back to the Financial Exchange. I hope everyone is staying warm. If you live anywhere between, Oklahoma and northeastern United States, it's about the area that got walloped by snow, ice.
There,
it's national show, Paul. We can't just acknowledge the
Oklahoma, not a flyover state.
Whooping that the Northeast got here. It was most of the country that got a good whooping from this most recent snowstorm. Anyway, we are back at it here on the Financial Exchange. Paul was able to dig out of his home and made it here today to join us. And a fair bit to cover this week. As we mentioned earlier this week, we will have a Federal Reserve meeting tomorrow with an interest rate announcement. We'll have earnings from Meta, Microsoft, Apple, and Tesla, among others. We have earnings from major credit card companies as well. We've got some job cut announcements coming from UPS. We've got new policies on seating arrangements from Southwest Airlines. But the news that is moving markets today, or at least moving the shares of some major health insurers.
Tough to be a healthcare investor today.
Big time. You've got some major cuts coming from the Trump administration to proposed Medicare reimbursement rates. And this is a topic that is having a major impact on companies that operate in this space, but is not on the surface all that easy to understand as a regular consumer, especially one who's not yet on Medicare.
Right.
If you're on Medicare, it's a little bit clearer, but even then it's a little bit complex. And so we're going to spend a little bit of time during this first segment explaining why we think UnitedHealthcare stock, for example, is down 19.5% today as we speak, wiping out 1/5 of its market capitalization in a morning. By the way, that follows other news where UnitedHealthcare stock over the last 12 months is down nearly half. So been a rough go for some of these health insurers as they face increased pressure about controlling prices and reimbursement rates on Medicare. But here's how there's a bunch of different pieces to this. One, all of the Medicare consumers out there are used to the cost of their Part B premiums going up every year.
Right.
It comes right out of your Social Security check. This year in particular, they went up a lot, nearly 10% in terms of the overall cost increase of Medicare Part B, topping out at over $200. I think that was an $18 increase year over year. And the COLA on your Social Security most certainly doesn't cover that. But that's not what we are referring to here. That is what you pay for Medicare. What we're talking about here is the proposal from the Trump administration to increase year over year a 0.09% bump in what the government reimburses those companies that provide Medicare plans to individuals.
Right.
And so this is not what you pay, it is what the insurance companies get reimbursed. And it has some complex problems for those insurers. The first one is clearly a squeeze to their margins and how they make money on these Medicare Advantage plans that they offer across the country.
Yeah, so I want to try and set the scene by sort of explaining the differences between the two, because you're right. If you're not in the weeds of being enrolled in one of these programs, it's probably harder to wrap your mind around. And this will dovetail into why we'll talk about it specific to why the healthcare sector is getting beaten up so hard today in early trading. So Medicare, like you mentioned before, Part B is sort of the main premium that's set by the government. Then if you're on Medicare, then you're paying some deductibles and 20% co-insurance. And there is no out-of-pocket cap on, unless you buy additional coverage. You could spend on that 20% upwards of significant sums of money.
Sure.
What the benefit is with being on Medicare Part B or just within the system is you go to the doctor, there's something wrong with you, they service it, they send the bill to the government pays them a fee for what the service is. Yeah, there's that 20% in the deductibles that you have to worry about, but it's really a relationship between the health insurer sending the bill to the government. We flip that around on Medicare Advantage. This is the deal with the healthcare insurers where you are signing up with the UnitedHealthcare, with the Humana, and basically what they're saying is we're going to go out there and we're going to negotiate your healthcare coverage. We're going to promise you pretty low in terms of premiums or sometimes $0 premiums. You're not going to be subject to the Part B costs that others are in Medicare. You're going to have to pay co-pays, but you don't have to pay that 20% co-insurance that I'm talking about here. And we're going to cap your out-of-pocket maximum a year. And that's the big selling point, is that you are capped in terms of knowing you will not spend over X amount. What are some of the limitations with Medicare Advantage? You got to go in network. You need referrals. It's not as seamless as a system as Medicare. We now dovetail on that. What's the big deal? We've now kind of decided the two differences. We've gone over the differences between the two. How UnitedHealthcare and particularly Humana, which generates about 86% of premium revenue from Medicare Advantages, they're getting paid a lump sum amount from the government to offer you that health care for Medicare Advantage. That percentage is going up very minimally this year, and that's why these healthcare stocks are taking a big hit.
Yeah, to be clear, I won't claim to know what CVS and UnitedHealth executives were anticipating, but the general term that's been out there is, hey, with the cost of medical care increasing so much, with the cost of GLP-1 drugs, that medical utilization is what they refer to here. You know, the frequency of people going to the doctor, getting prescribed new medications, et cetera, et cetera. These companies were anticipating a 4 to 6% increase for 2027. They just got a 0.1% increase.
Right.
What is that?
1% increase if you round it up.
No. It was 0.09%.
Oh, right. 0.09.
So 0.1%
right.
rounded.
Right.
Effectively no increase is what these companies received. So immediate effect there is shrinking margins, right? If your costs are increasing 4 to 6% and your reimbursement from the government goes up nothing, then you are going to see margins shrink in the future. I mentioned UnitedHealthcare. Their stock's down 19.4% now. Humana down 20% today. CVS Health, which obviously has a big insurance network but also operates the stores, down about 10.7%, all on this news. I think the next order question is what precisely happens next? And by the way, I know this is dramatic. I know we're framing it as a negative for these investors. I'm not sure it's a net negative for the system as a whole, but I do think Medicare beneficiaries are going to be impacted. Ultimately, United, Humana, and CVS investors are not going to sit there and say, oh yeah, this is fine, don't make any changes to your business. So what is likely to happen in 2027, I think, is the open question, because this is when this is affected. One, in the meantime, they might just try and deny more claims and find ways to make up the margins in 2026 because they know this cliff is coming in 2027. But if you're on a Medicare Advantage plan, you may be familiar with some kind of nice-to-have perks that are on your plan, right? That can include over-the-counter drugs, gym memberships, transportation options to doctors, dental, vision. All these things are selling points of the plans, but they're not required. So could you see some cuts there? All of these plans also have different out-of-pocket maximums. So how much are you required to pay? The premium might not move, but hey, maximum that you can take out of the pocket might be different in the coming plan years. In a worst-case scenario, some markets, they might just say, look, we can't continue to offer plans in XYZ market. And you've already been seeing that with a number of insurers across the country. If you're on Medicare or Medicare Advantage now, you might be familiar with this. I know here in New England, there was a major insurer that just said, nope, we're not offering plans anymore. I think anywhere in New Hampshire. So these are the likely ramifications of what all of this could look like. Now, I mentioned I'm not sure this is a net negative for the overall system. Ultimately, this is an attempt to control costs.
Right.
And the problem, we've been talking a lot about subsidies on the show and interference by the government in different markets. And Medicare is, the definition of that, right? It is a government-provided program for health insurance. And as such, you see some waste, fraud, and abuse in the system. Many of these insurers have been accused of marking up bills to the government or not, really creating incentives for people to not use as much health care. And I think that this is a on the surface, it seems like a blunt force attempt to try and control some of those costs by saying, hey, you're going to continue to provide health insurance to your customers, and the reimbursements that the government is going to give you are going to shrink. And so the natural reaction by the insurance companies, though, to be clear, I think is going to be pass along some of this. It's not a cost increase, right? I guess it is a cost increase because their costs are increasing because of the drugs and the reimbursements. They're just not seeing the corresponding revenue increase from the government. So what is the likely outcome? Like I mentioned, for beneficiaries on these plans, likely outcome is eventually shrinking benefits, stepping out of certain areas that are high costs. Particularly rural areas have been mentioned here as, hey, if we're offering a health insurance plan in rural Wyoming where it's really more, we're doing it because we feel like we need to, but between transportation costs and, limited hospital choice, it's really expensive to offer these plans. You could see them stepping out of those areas. It sets up a fight, obviously, between the Trump administration and these insurance companies come 2026 and 2027. Let's take a quick break. This is, again, a bit of a breaking news story with those companies dropping dramatically. We'll be coming back to it throughout the show, but we do have a Fed meeting tomorrow, so we're doing a bit of Fed talk next on the Financial Exchange.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com. From the other law attorneys at Cushing & Dolan, here's something you need to hear. Most people think long-term care planning is something they'll get to someday, until suddenly someday is today. When a spouse or parent needs nursing home care and no planning was done, the costs can be overwhelming. Cushing & Dolan are elder law and estate planning attorneys who help New England families protect their homes, savings, and retirement, even when a health crisis comes out of nowhere. They've just released a new guide called Long-Term Care Planning for Procrastinators. It explains what options may still be available and what steps you should take before writing that first check to a nursing home. If you've been putting this off, or a loved one needs care right now, time matters. Call Cushing & Dolan today at 866-848-5699 to get your free guide. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck Zada from the Armstrong Advisory Group. One of the biggest mistakes you can make as you prepare for retirement is missing important deadlines for Social Security and Medicare. You can apply for Social Security up to 4 months before you want benefits to begin. Medicare has a 7-month enrollment window around your 65th birthday. Missing that window may cause coverage delays. Something else to consider is that you don't have to start them at the same time. You can enroll in Medicare at 65, but delay Social Security to increase your monthly benefit. Learn more in our new guide called How to Apply for Social Security and Medicare. To get your free copy, call us today at 800-393-4001. That's 800-393-4001, or request the guide online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
Visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
All right, Paul. Fed meeting tomorrow, and, really important deliberative one in terms of what could happen here tomorrow at 2:30 p.m. when Jay Powell takes the stage. I'm, of course, joking because there is currently a 97.2% chance that when Jay Powell takes the stage, or rather before Jay Powell takes the stage, the Federal Reserve is going to announce that they did nothing at this meeting in terms of moving rates in one direction or another. But what sort of questions do you anticipate Fed Chair Jay Powell getting, and are any of them going to be actually relevant to the path of interest rates, or is it all going to be, the drama of Fed versus White House?
It seems like that would be an easier place to start with, to maybe ask about the criminal investigation, which I'm sure he probably has to have a canned. He can't really give much further comment to it. But ultimately, when you look at this Federal Reserve meeting, we're not going to try and oversell it. It is probably going to be quite straightforward. What are really the factors at play here heading into this meeting? You have a Fed that has that dual mandate of keeping employment under control and also dealing with inflation. We've seen inflation sit at about 2.8%. It doesn't seem like there are tremendous catalysts to have that driven down any further over the course of the year. I mean, it could, who knows, but ultimately the Fed's target is 2%. We've been sitting at 2.8%. There isn't really a huge argument with any of the recent data that we've seen to certainly increase interest rates. That's totally off the table because that inflation number has stayed around that 2.8%. The bigger concern and the biggest focus for 2026 is the labor market. That would really be the only real impetus for the Fed to cut further as these months march along. It really seems like we look back at 2025, once some of the revisions are completed, there is going to be almost no job growth, or let's just say minimal job growth over the course of the trailing 12 months. So heading into 2026, it's really the labor market that takes center stage. But when it pertains to this meeting tomorrow at 2 o'clock, there's not a lot to be said here. There's not a lot of new data to analyze. So ultimately, the questions about the criminal investigation are far more juicier for economists and journalists to ask rather than anything on monetary policy. I guess you could say, looking at individual people and what they may vote, Fed Governor Stephen Miram has been unsuccessfully pushing for easing. There's been other members of the Federal Reserve Board who have been trying to push for lower rates. Outside of that drama and potential infighting, which you're not really going to get a lot on, there's not a lot to see here.
No, I tend to agree. And again, setting that framework, Paul mentioned the inflation numbers. As of the absolute most recent read on CPI, which was December, it came in, rounded at 2.7%, which was lower than what we saw in the fall of last year. Then you had the government shutdown where you kind of couldn't compare these numbers for a period of time. You, on the unemployment side, had unemployment climbing through the course of last year, right? If we take a look at January of 2025, we were sitting around 4 to 4.1%. By July, you had it at 4.3%. And so that caused the Fed to say, okay, inflation hasn't gotten too out of control here in spite of our concern about tariffs. You are starting to see a climb in the unemployment rate. Could this be the beginning of another trend on unemployment? And so they cut rates at the meetings in, September of last year, October, and December by 25 basis points at each of those three meetings. And since then, both inflation and unemployment have dipped down a bit.
Mm-hmm.
Furthermore, we've been getting weekly jobless claims numbers. We get those every Thursday. Those have been coming in at very low levels. And so while the Fed had some concerns, and I think was justified in their concern about the state of the labor market in the fall of last year, because the data was indicating an increase in unemployment, the continuation of that move just doesn't make a ton of sense when, again, inflation is lower but not defeated, and unemployment has seemingly calmed down a bit. So the weekly jobless claims, by the way, have been coming in below 200,000, which is a really low level, meaning, they might not be getting new jobs, but it doesn't appear that the unemployment rate would be increasing based on those firing rates. And so while there's been a lot written about, for instance, the layoff announcements covered by Challenger Gray and Christmas and the difficulty in finding new work, the data doesn't really support a economy that's in some sort of free fall and needs to be rescued by lower interest rates. And so I do think you see a pause. I don't think that means that they will do nothing, but it's growing increasingly difficult to see the case for making any rate changes for the rest of Jay Powell's term.
I agree.
Again, he's in here until May, and you've got meetings tomorrow, March 18th and April 29th. Can a lot change between now and the end of April? Absolutely. But you'd need to see a pretty significant shift in the direction of this economy right now. And if I am thinking about shifts in the economy, I'm actually a little bit more worried about the inflation side than I am at the unemployment side today. If I'm taking a look, outlook here, we've got tax filing season where the average benefit or the average tax filer is going to receive a significantly larger refund. The Social Security recipients who, if they earned less than $250,000 in 2025, are going to be getting a larger deduction on that front. This is for married couples. You've got folks that are pulling in tips that are going to receive a larger deduction, overtime that's going to receive a larger deduction, and a bunch of other things on the corporate side. And so if I am the Fed and I, absent any data about inflation ticking up or unemployment ticking up, and I'm trying to read the tea leaves, which is their job, I think you acknowledge that, hey, there's some risk to both of these things, and let's see how tax filing season goes, meaning you're bringing yourself right towards the end of spring here before you make a real judgment call on data that gets released about that tax filing season.
Yeah, it has to be much more of a wait-and-see approach, and it seems like that's what we'll get tomorrow. We'll be covering it on, I guess, Thursday's show, but ultimately shouldn't be too much to report there.
Markets, big-time mixed territory here. A lot of that due to some of the major moves in the health insurance space. We're going to take a quick break. When we come back, a full market recap with Wall Street Watch is coming right up.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Retirement comes with a lot of exciting freedom, but also with some permanent decisions. 2 of the most important ones are when to file for Social Security and how to set up your Medicare coverage. Claim Social Security too early and your monthly check may be permanently reduced. most. Missing Medicare enrollment deadlines might mean significant penalties and gaps in coverage. We have a new guide available called How to Apply for Social Security and Medicare. It breaks down when you can apply, what information you'll need, and how these decisions fit into a smart, coordinated retirement plan. Get your copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your financial exchange quick tip of the day. And we're talking about last-minute nursing home lessons that can help save your assets. What can be done last minute to save your home and your liquid assets when one spouse is entering the nursing home?
So with a married couple, you do have more options than as a single person, but with a married couple, your home is not at risk because the community spouse living in the home is allowed to keep the home. Doesn't matter the value, as long as they're living there, it's not countable and non-lienable. They also give the healthy spouse about $135,000 to keep. It's not a lot when you think of the big picture, but all the rest of the money would be at risk. But at least a quick last-minute way of protecting all those other dollars, all over and above that $135,000, would be to basically transfer the assets, those excess assets, to the community spouse, which, by the way, is not a disqualifying transfer, so no 5-year waiting period. And then once that community spouse gets those assets, depending on their age, they can buy what is known as a Medicaid qualifying annuity. These are special annuities. They convert the excess assets into an income stream, and then it's no longer an asset, keeping the community spouse over assets. Then the community spouse and the sick spouse are under assets, and they're eligible for Medicaid.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan at 866-848-5699. It's called Long-Term Care Planning for Procrastinators. 866-848-5699. Or if you prefer, you can simply go to their website, legalexchangeshow.com, and request it there.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are mixed as traders shift their attention to health insurer stocks this morning after the Trump administration floated a proposal to hold Medicare rates almost flat next year, far less than expectations of a 4 to 6% increase. Wall Street's also waiting for a Fed meeting with the decision on interest rates tomorrow afternoon, in addition to big tech earnings. Right now, the Dow is down just over 1%, or 504 points lower. S&P 500 up about 0.33%, or 25 points higher. NASDAQ up nearly 0.9%, or 207 points higher. Russell 2000 mostly flat. 10-year Treasury yield flat at 4.215%, and crude oil up nearly 1% higher. trading at $61.20 a barrel. UnitedHealth sinking 18% following that news that the Trump administration is proposing to hold Medicare rates mostly flat in 2027. Humana also seeing a tumble of 18%, while shares in CVS Health are down nearly 11%. Meanwhile, General Motors reported a $3.3 billion quarterly loss, but still reported better than expected earnings for the fourth quarter. The automaker also issued a 2026 outlook that also exceeded analysts' forecasts. Furthermore, GM upped its quarterly dividend by 20% and announced a $6 billion buyback program. GM stock jumping 8% on that news. Elsewhere, Boeing reported stronger than expected fourth quarter revenue and said it was making solid progress with its turnaround plan. However, Boeing shares are falling about 2%. American Airlines down by 3% after the carrier took a $325 million revenue hit from the government shutdown. However, American still posted quarterly revenue growth and issued an encouraging annual outlook. And UPS announced it will eliminate an additional 30,000 operational jobs as it winds down its partnership with Amazon. The cuts come after the company eliminated 48,000 jobs in 2025. UPS shares are up over 2%. I'm Tucker Silva, and that is Wall Street Watch.
We talk a lot about debt and deficits at the national level on this program, and New York Times has a piece today, which is well done, correct, and also potentially irrelevant for the moment, but I think worth discussing. So record debt in the world's richest nations threaten global growth. The United States national debt, for instance, sets at $38 trillion with a T dollars. For some context, because that is a meaningless number for almost everybody, that's roughly 125% the size of the American economy. So the debt is, 125% of the overall economy. And in fact, when you look at the G7, 6 of those wealthy G7 nations, the national debt equals or exceeds the country's annual economic output. Japan's is roughly 2 times. Mm-hmm. So this varies country by country, but the trend that the New York Times accurately points out is that across the board, national debt compared to GDP or output has increased dramatically over the last 5 years, but been on one steady increase line for the last several decades. And there's a number of different things to blame here. Part of it is politics and politicians' unwillingness to take away benefits from citizens. Part of it is demographics, with almost all of those G7 nations experiencing slowing population growth and strong
an aging population growth on top of the slowing population growth. So there's more cost for healthcare and pension servicing, not so much domestically here when I'm talking about pensions, but more on a global level.
And so when you combine that with an unwillingness to raise taxes to dramatic levels, you have what you are seeing now. And the question is, the second part of this is that, it's going to threaten global growth and it's raising broader alarms. And there's some evidence of those broader alarms. People have pointed to this as being a contributing factor to the run-up in gold as of late or other commodities, some lack of confidence in countries' ability to pay that debt or their confidence in those currencies of those nations. And you talk about that here domestically. It's obviously more pronounced in other countries that are not a reserve currency. But the question still remains, will this be an issue that you and I even face and have to reckon with in our lifetimes? And I don't have a firm answer for you. And I don't have a firm answer for anybody that's listening out there as well. But there's
I would lean more yes than no if I had to put a probability on it. Debt is always like this. It's a problem. It's not a problem until it is a problem. And you can look at just stories on a company level over decades and decades. There's always been this abuse and misuse of debt over time, and it only rears itself in times of strife and difficulty. Yep. And for the most part, outside of COVID, where we did see a short sort of uptick in sort of economic uncertainty, and as a result of that, trillions of dollars were spent to kind of correct that trend. We've been fortunate that the last 15, 20 years have been a reasonably, stable period from an economic standpoint.
And we've dramatically increased the pace of spending with that relatively stable economic environment.
The salient point made in this piece is that it's nice to be able to turn to spending more like you did in 2008 to stimulate the economy and get it out of a really tough spot. It becomes more challenging, you'd think, to do that when you're operating at 125% debt to GDP. If another crisis were to emerge, it would limit your ability to spend more. Now, a government is not like Mike and I's household budget where it can just continue to run that deficit up higher and higher, but interest rates and what debt costs are out there as a result of your debt, that is something that can snowball into a huge problem. If you look at the United States right now, the second biggest line item on the budget sheet is Social Security being the first, is our cost and interest. We spend $1 trillion servicing our debt and interest. And I know we've brought this up ad nauseum on the program, but we're going to continue to beat that drum that it's an issue that's out there and politicians are going to continue to ignore those cries.
Yeah, and I think you're right that it will be an issue that continues to be ignored and continues to worsen until a time of crisis. And the time of crisis, who knows what it looks like? It could be a shutdown like we saw during the COVID pandemic. It could be a war. But in one of those events, there will come a time in all likelihood where maybe in the U.S., maybe in another country, the government needs to dramatically expand spending without dramatically increasing taxes. And the net result could be higher interest rates for the citizens. It could be higher inflation for their citizens. But there's likely to come a point in time, and we've seen it in other less fiscally serious countries, where government goes on a spending spree for sometimes good reasons, sometimes terrible reasons, and the net result is, higher interest rates shooting up into the teens, inflation to the point where your currency is deemed useless, and a big reset that needs to happen with some of those effects. But again, to the point that I think is important here, I can paint all these doomsday scenarios, and I am genuinely concerned about the fiscal path that the United States and other wealthy countries are on. But am I confident that it's going to happen in the next decade? No.
Yeah, I don't have the ticking
Am I 100%
time
sure it's going to happen in my lifetime? Also, no.
Mm-hmm.
I don't want to burden my kids with it, but I am not certain that this is going to be the outcome. And by the way, the only solution is a dramatic combination of tax increases and spending cuts, which no one will ever win an election on. So paint me the path where that gets fixed. We've got to take a quick break. When we come back, a little bit more company news. GM seeing some good news. UPS out there with some potential cuts, and airlines talking about the latest storm and its potential impact on earnings. That's next on the Financial Exchange.
There's only one show that follows Wall Street's continued volatility. Keep it here all morning long on the Financial Exchange Radio Network. From the other law attorneys at Cushing & Dolan, here's something you need to hear. Most people think long-term care planning is something they'll get to someday, until suddenly someday is today. When a spouse or parent needs nursing home care and no planning was done, the costs can be overwhelming. Cushing & Dolan are elder law and estate planning attorneys who help New England families protect their homes, savings, and retirement, even when a health crisis comes out of nowhere. They've just released a new guide called Long-Term Care Planning for Procrastinators. It explains what options may still be available and what steps you should take before writing that first check to a nursing home. If you've been putting this off, or a loved one needs care right now, time matters. Call Cushing & Dolan today at 866-848-5699 to get your free guide. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Hi, this is Chuck Zada from the Armstrong Advisory Group. One of the biggest mistakes you can make as you prepare for retirement is missing important deadlines for Social Security and Medicare. You can apply for Social Security up to 4 months before you want benefits to begin. Medicare has a 7-month enrollment window around your 65th birthday. Missing that window may cause coverage delays. Something else to consider is that you don't have to start them at the same time. You can enroll in Medicare at 65, but delay Social Security to increase your monthly benefit. Learn more in our new guide called How to Apply for Social Security and Medicare. To get your free copy, call us today at 800-393-4001. That's 800-393-4001, or request the guide online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
The Financial Exchange is incredibly proud to be a partner of the Disabled American Veterans Department of Massachusetts. Planning is well underway for the 2026 DAV 5K. The event sold out in record time last year, so head to dav5k.boston for all the information about how you can participate this November or make a donation to support our great American heroes. Your gifts help fund free rides to medical appointments for veterans and the nation's first DAV-led housing initiative, providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today. That's dav5k.boston.
General Motors moving up 9.25% in early trading today. They're seeing their profits growing $2 billion this year. They're planning to issue share buybacks. All of this obviously on the back of their hybrid and electric vehicles and real gas-efficient cars that they're selling out there. I'm, of course, joking. They're making all of their money on giant trucks and SUVs and luxury vehicles, which they are doing quite well with after the pivot away from EVs that pretty much every large automaker has had to do based on just, I don't know. I continue to blame this on just bad leadership out of the major, especially U.S. automakers over the course of the last 5 or 6 years and misidentifying a market of, hey, this is a really popular car, the Tesla Model 3 specifically, and, it's going to be a permanently growing segment of the car market, and we should invest tens of billions of dollars in it. So since they've pivoted away from that, they've been doing quite well. I think the other obvious question, though, is all the U.S. automakers have been disrupted by tariff threats and implementation. Where they manufacture cars is in question in terms of what's going to be reliable and allowed in the future. And as much volatility as we're seeing now, I can very clearly see another bout of volatility 3 years from now if we have a Democrat-controlled Congress that goes and rewrites all the rules on fuel efficiency and EV subsidies and all of this stuff again. So it has been a volatile decade for automakers, and I don't really see a path where that changes for them.
Yeah, I think if you're an automaker, and obviously they haven't been the best stewards of capital over a 20-year period, GM in particular, and this is another evidence of that, even though their stock has done quite well recently as they've kind of pivoted their strategy shift. But the amount of spending, Mike, here that they just took a $7 billion write-off, largely tied to the EV business and more write-offs with that to come. This whole idea of them transitioning to all electric by 2035. Finally, GM Chief Executive Mary Barra said that while they're committed to it, 2035, a little ambitious in terms of making that full transition. And ultimately, taking a more prudent, balanced approach would be the way I would armchair quarterback advise them, because like you mentioned, the swings in the political market and in terms of policies and things like that can really, it seems like, influence what these businesses, these auto manufacturers were doing. And I would just caution them to not get overly one way or the other, depending on what the policy whims are. It's just, it's not the best way to run a business because they can change very quickly.
If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands, enjoy crystal clear water and powder soft beaches, world-class dining, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today at visitusvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
UPS stock is moving up nearly 3% today on news that we don't really love to cover, but certainly helps the bottom line. They've announced that they'll be cutting an additional 30,000 positions this year as they continue to try and reshape the package delivery giant. They've been cutting their network with Amazon, cutting package deliveries there, which that deal from the very beginning, you just looked at it and you said, how is Amazon not going to just take advantage of this deal that they have with UPS to deliver packages to the last mile and handle returns when they are actively trying to compete with them? FedEx identified it pretty early on. UPS stuck with it and now are backing away from it, saying it's a pretty low margin business and doesn't make much sense for us. Nonetheless, they've been closing, consolidating dozens of sorting facilities, offering buyouts to union drivers, cutting back on seasonal workers, all to trim those expenses. And again, according to investors at least, seeing some positive effect there with the stock moving up today and after really bottoming out this fall, seeing some recovery in share price there. But I think a long way to go is the answer for UPS as a company.
Yeah, it's interesting. I've worked with a client who had worked at UPS and had taken a severance package buyout, and he was of the opinion that there was more to come of this. And this was last summer, and this is just evidence of it. And I feel like these cuts are going to continue to come. His viewpoint was that they are just going to continue to slash expenses as much as possible, and that seems like that's going to be a trend heading into this next fiscal year, just to try and bring down their costs across the board here.
Speaking of cuts and changes, Southwest Airlines, as of today, first day that they will be rolling out the ticketed seats where you are going to be assigned to your spot, which I was talking about this with Jim Polito this morning. Like, I hated the arrangement on Southwest. I was fine with it as a 20-something-year-old when traveling alone. As an adult with 3 kids, trying to navigate that experience and not knowing if we were going to be able to sit together, no thank you. No. It made me intentionally avoid Southwest, even though they had a lot of other nice perks, and we don't fly first class, so don't need that. Nonetheless, they've been undergoing a bunch of changes over the course of the last few years. The tagline "bags fly free," that's out. The seating arrangement where you get grouped and pick your seats is out. I think some dedicated hardcore Southwest fans are probably pretty upset about this. I think the bag piece is a different debate and different conversation. I don't know what Southwest's identity is now that they have implemented these, but on the seating piece, I have to say that I don't think people are going to be too upset. I mean, the number of times that I flew that, and there are just the Group C people walking up and down the aisle, desperately trying to find a seat. The flight attendants trying to, enforce that you can't leave your sweatshirt on the middle seat and save it for your husband or boyfriend or sister's cousin. Like, it seemed like a bit of a cluster, quite honestly, to administer on behalf of Southwest. And I'm sure the flight attendants are overjoyed at this, to not have to break up fights over this and figure out where we're going to put that last person on the plane.
I just feel like there's no differentiation in airline experience anymore.
True.
Each one used to have its own sort of niche, and it seems like...
Remember when JetBlue came out? It was like, oh, this discount airline that has a TV in every seat.
Right.
Oh, cool.
That was
they
new
fly
and
some
exciting.
Specific, and now two decades later.
Who would you point to that does anything radically different than the other? I mean, between Delta and
Spirit.
American and... Yeah.
And not for the positive.
Poorly. And I think Ryanair internationally, too, which falls in that same sort of category. But discount airlines have struggled mightily. And then you have just the premium, the Deltas and Americans, all they're doing is just funneling more money into charging outrageously high costs for their first-class seats and business seats. There's nothing...
Which is doing well.
It is doing really well, but there's nothing unique. It just seems like all these airlines are the same.
Worth mentioning, by the way, that Southwest, with all these changes and a number of different things they've been focusing on, the Wall Street Journal's reliability rankings came in number 1 in 2025. Beat out Delta for the first time in a long time, and really shined in terms of on-time baggage and everything along those lines. The operational side of Southwest going quite well. We've got to take a quick break, but a lot more to cover in the second hour of the Financial Exchange. We'll be right back.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Have you saved enough for retirement? This is Mike Armstrong from the Armstrong Advisory Group. The advisors at our firm have 150 years of combined experience in the financial services sector, and they all work together to help you develop a unique financial plan that offers investment management, financial planning, tax strategies, and retirement planning. It's our goal to help you position your assets and give you peace of mind. Having a solid retirement strategy and investment plan becomes more important as you age, so visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Just click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us develop a plan to help you secure your financial future. Again, that's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Here at the Massachusetts Department of Elementary and Secondary Education, We are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
If you've been dreaming about a getaway that feels far away, but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We have a guide available this month titled How to Apply for Social Security and Medicare. Mike, when we talk about actually determining when to apply, there are a few different factors that go into it, but I think really the specifics of, hey, if I want money at date X, when do I apply is kind of at the crux of this.
Oh, sure. And, oftentimes when you go to apply, they will actually tell you that they're backdating your application to the date that you apply. And so your first check might include a few checks of Social Security. You do have to be specific about when you request the actual start date. The good news is you do get a prorated increase for, we talk about this in years, but you do get a prorated increase for every month that you end up delaying your Social Security benefit, and you can be highly specific about when you actually want the income to start.
How does one go about determining what age they actually should start Social Security?
Yeah, look, every actuary out there will tell you this is all a life expectancy question and calculation. I'll tell you there's more to it than that, but it is highly specific to each individual. When am I retiring? When is my spouse retiring? When do I actually need this money to kick in? And what is my backup plan for covering my expenses if it doesn't kick in right away? So yes, life expectancy, a major factor in the decision, but there are other questions to be answered as well.
Our guide is titled How to Apply for Social Security and Medicare, and the ways that you can request it, there's 2 of them. First, you can call 800-393-4001. The second way, you can go to armstrongadvisory.com. Again, that phone number is 800-393-4001, or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. From the other law attorneys at Cushing & Dolan, here's something you need to hear. Most people think long-term care planning is something they'll get to someday, until suddenly someday is today. When a spouse or parent needs nursing home care and no planning was done, the costs can be overwhelming. Cushing & Dolan are elder law and estate planning attorneys who help New England families protect their homes, savings, and retirement, even when a health crisis comes out of nowhere. They've just released a new guide called Long-Term Care Planning for Procrastinators. It explains what options may still be available and what steps you should take before writing that first check to a nursing home. If you've been putting this off, or a loved one needs care right now, time matters. Call Cushing & Dolan today at 866-848-5699 to get your free guide. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning. Happy Tuesday. Welcome back to the Financial Exchange. It's Mike, Paul, and Tucker with you on a busy week. We've got a Fed meeting tomorrow. We've got earnings coming out all this week. UnitedHealth, Raytheon, Boeing all reported earnings this morning. Tomorrow, we'll hear from Microsoft, Meta, Tesla after the bell. Thursday, we'll be hearing from Apple, Visa, MasterCard. So a busy week for both earnings and economic news to digest. An interesting market so far in trading this morning as the Dow is off about 0.75%, whereas the NASDAQ is up by 1 full percentage points. Among the other movers out there, Dow being dragged down by UnitedHealth, whose stock is off 19.25% this morning. That follows an announcement from the Trump administration that reimbursement to insurance companies for Medicare plans would be increasing in 2027 by only 0.09%. Investors and executives at those health insurers had been expecting reimbursements to increase 4 to 6%. So effectively what you have is health insurers, specifically those who have been making a growth play in the Medicare Advantage plan space, getting absolutely crushed today with UnitedHealth down over 19%, Humana at last look down 20%, and CVS Health off about 10.5%. The likely outcome for all of this, in addition to the stocks getting clobbered today, is all of those companies and others taking a good hard look at their Medicare Advantage businesses, trying to figure out which ones are not terribly profitable for them, exiting some of those markets in all likelihood, as well as cutting back on benefits for beneficiaries of those plans come 2027. But a lot of time for them to plan that game out. In the meantime, their stocks getting absolutely clobbered in early trading today.
Yeah, and it seems like there could be some adjustment on that final number there in terms of the cost increase, but it's going to certainly be way less than anticipated.
Yeah, I suppose that's an interesting point that I hadn't even considered. You know, the President Trump himself is famous for throwing out numbers that obviously shake things up quite a bit before going to the negotiating table and kind of reshuffling the deck there. And it is quite possible that, in spite of me taking this news seriously, investors clearly taking it seriously, that it's a starting negotiating point and we could see further changes there. But net, what I would anticipate in this case is further changes to how those plans work, but ultimately, perhaps a positive step in the right direction for cost control. I know nobody really likes to hear that, especially on the Medicare side of things, but if we're all going to constantly complain about the cost of healthcare, health insurance, we're seeing, Affordable Care Act premiums obviously skyrocket this year, then somebody is going to get hurt in all of this. Either the government is going to play a larger role in paying the bills and absorbing those costs and either running up the deficit or passing it along in some other way. Insurers are going to take a hit to profit margins like we're seeing play out in stocks today, or insureds are going to see higher costs through higher premiums and or lower reimbursements for the care that they are provided. So there is no easy fix to the health insurance system, and as much as I and others like to complain about the businesses of UnitedHealthcare and others, and I'm not saying there is plenty to complain about with how they conduct their businesses, they're not ultimately the full ones to blame there. There are plenty of others who are, causing the cost of healthcare in the United States to be delivered at an extremely high price.
Yeah, just look at the pharmacy benefit management. We could go on and on.
We could. Big Tech's borrowing spree raises fears of AI risks in the U.S. bond market. There's a piece from the Financial Times today, and it's speaking specifically about what is anticipated from major companies and their borrowing over the course of the next few years to build out this AI infrastructure. And I don't think any of us have a real great idea of what this looks like, but it is also seemingly safe to say that companies are about to embark on a pretty big borrowing spree, meaning issuing new debt out in public and private markets. And so again, just taking this on the surface, if there is a bunch of new debt that enters the market over the course of the next 5 years in order to build all this out, supply and demand here, supply of new debt goes up, price likely comes down if demand does not increase, meaning interest rates maybe need to go up in order to facilitate some of this if it's genuinely that large at scale.
Yeah, it's interesting. The corporate bond market, for those who are not familiar, it's companies going out there and issuing debt and then paying a rate of interest for the bondholder to provide that capital over a period of time. For the most part, very broadly speaking, it's usually telecoms and financial companies that are the ones issuing this debt. Not entirely, but they tend to be some of the bigger players. But as outlined here, it seems like, and this has been not something that has been a trend for the last few years, that some of these big tech companies like Microsoft and Oracle and Google and others will be more frequently issuing debt on these corporate bond investment grade raises here throughout the United States. And it is important to note that even though a lot of this is to finance the AI build out of these businesses, the balance sheets of these companies differ greatly from some of these telecom and financial companies out there, where there is tremendous amount of cash reserves on there and a lot of free cash flow that's generated. But still, it is noteworthy, the shift. It is seismic in terms of the numbers that you're seeing from an issuance perspective. You're talking about these big hyperscalers issuing $44 billion of debt in 2024 on the corporate bond markets, $170 billion in 2025, and Morgan Stanley projects over $400 billion in 2026, so a 10x in a 2-year period from 24 to 2026.
A related issue on the AI side of things, did you happen to see commentary from Satya Nadella at Davos on just energy scarcity and what they're doing on AI? So he was on a panel and talking about AI with Larry Fink, the CEO of BlackRock, and Satya Nadella talking about all of this. And an interesting comment again from the CEO of a company who, while they have spent boatloads of money on artificial intelligence, I definitely do not point to them and say that they have any leadership in customer-facing tools on artificial intelligence. By all accounts, their Copilot has been a pretty messy rollout and not getting a ton of adoption and seeing some drawbacks. Gemini and ChatGPT remain at the kind of top of that discussion, I think, when it comes to most usable tools that are out there. But his quote here, and I'll just read, he's referring to tokens and tokens referring to AI build out, but we will quickly lose even the social permission to actually take something like energy, which is a scarce resource, and use it to generate these tokens. If these tokens are not improving health outcomes, education outcomes, public sector efficiency, private sector competitiveness across all sectors, small and large. And I think that is a under-discussed topic of this endeavor that they are going on. Is by its very nature, you are spending a boatload of energy, you are driving up utility costs for consumers across the globe, and to this point, it's really tough to point to anything in this stuff that has had a public benefit of any sort. I mean, yes, everybody out there can use Gemini for free, but does anybody look at it and say, that's improved my life to this point? And so I just found that comment to be interesting, coming from one of the CEOs that is most plugged into the development of artificial intelligence and also very much trying to play catch up.
Also funny that Microsoft, within the last 15 hours, it came out that they have 15 more data centers that won approval at the former Wisconsin Foxconn site. So maybe a little bit of political pandering with some of that commentary there. And to be fair, you mentioned that like they're not tied into Gemini or some of the big players. They've got a 28% stake in OpenAI. So they are, they've invested not a backbreaking for them amount of money, but a significant sum in the fortunes of OpenAI. So they're certainly in the space there.
I just think I think back to my own commentary from the course of the last 3 years, and when I looked at the landscape of current big tech companies that, with these tools being created, would seemingly have a very willing customer base. And Microsoft was my top of the list.
Right.
Like, if you can help me build a PowerPoint slide with AI and make it actually usable and functional, or write a formula in Excel because I don't know how to write macros, or edit a Word document in a more seamless fashion using AI, I looked at that and said, wow, what low-hanging fruit here. They can integrate these tools directly into their products, and I would pay more for them.
Right.
They haven't done that.
No, Microsoft Office, it doesn't seem like has evolved that much over the last 10 or 15 years. And
but even specifically the last 3. Right. No evolution over the last 3.
Yeah.
And
if you...
I guess Outlook would be the one area where you can point to say, yeah, there's been some pretty significant changes on the Outlook with the Copilot add in there. But, yeah.
But does it change the way you do email, you write emails or receive emails over the last 3 years? No. I feel like if someone came out of retirement who had stopped working in 2018 and came back and looked at Microsoft, just specifically the tools, they wouldn't be that lost in terms of what's changed there.
Let's take a quick break. When we come back, a little bit of trivia is next on the Financial Exchange.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Hi, this is Chuck Zada from the Armstrong Advisory Group. One of the biggest mistakes you can make as you prepare for retirement is missing important deadlines for Social Security and Medicare. You can apply for Social Security up to 4 months before you want benefits to begin. Medicare has a 7-month enrollment window around your 65th birthday. Missing that window may cause coverage delays. Something else to consider is that you don't have to start them at the same time. You can enroll in Medicare at 65, but delay Social Security to increase your monthly benefit. Learn more in our new guide called How to Apply for Social Security and Medicare. To get your free copy, call us today at 800-393-4001. That's 800-393-4001, or request the guide online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. When a loved one needs a nursing home, decisions need to be made quickly. If you haven't started planning yet, get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn how to make smart decisions and avoid unnecessary expenses. Call 866-848-5699 to get your free guide today. That's 866-848-5699. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined. For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. Experience America's Caribbean and fall naturally in rhythm with the heartbeat of the islands while enjoying incredible beaches, world-class cuisine, and unforgettable sunsets. The weather is perfect all year round, so head to visitusvi.com and book your trip to St. Croix, St. Thomas, or St. John. Enjoy one or all 3 and enjoy the vacation of a lifetime. The USVI is America's Caribbean paradise. Plan your winter escape now at visitusvi.com. That's visitusvi.com. And boy, do I want to escape. Time for trivia here on the Financial Exchange. And on this day in 1984, Michael Jackson suffered serious second and third degree burns to his scalp when pyrotechnics exploded prematurely during the filming of a commercial. Despite the accident, the commercial was eventually completed and aired. So, trivia question today. Michael Jackson suffered serious scalp burns after his hair caught fire while filming a commercial for which company? Once again, Michael Jackson suffered serious scalp burns after his hair caught fire while filming a commercial for which company? Be the 5th person today to text us at 617-362-1385 with the correct answer, along with the keyword trivia, and you win a Financial Exchange Show t-shirt. Once again, the 5th correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
European Union and India have inked a free trade agreement, calling it the mother of all deals between India and the European Union, the largest democracy in the world, as a reminder. The deal specifics are still a little bit scant, but we do know that it's a pretty large free trade agreement. There are some specific exemptions to industries that both the European Union and India are interested in still protecting, but a lot more in the way of goods to flow freely between these two blocks. The obvious backdrop to all of this, I think, is the war in the war in Ukraine. India, for the last several years, has continued to buy Russian oil. The U.S. sanctioned them and threatened to impose tariffs on both the European Union and India, trying to incentivize a little bit more action on those fronts. And this deal seems to run in the face of that to some degree. We've talked at length about India acting its own interests, and this deal quite potentially is pretty historic and significant. But it does raise a lot of questions to me about the European Union and just what exactly they prioritize at this point. The quote from Scott Bessent, Treasury Secretary, on Sunday, ABC News Sunday: "The U.S. has made much bigger sacrifices than Europeans have. We have put 25% tariffs on India for buying Russian oil. Guess what happened last week? The Europeans signed a trade deal with India." It is a very interesting backdrop to all this.
Yeah, it seems like a little bit of playing both sides of the fence on India's part.
Yeah, I mean, look, I think India loves this idea. They can continue to buy Russian oil if they so choose, and now have a new trading partner in the European Union where they can export a lot of goods to at a pretty cheap price, maybe open up some of their car companies and tech firms to the bloc. So I think there's some pretty big incentives there. On the European Union side of things, obviously one of the fastest growing perhaps the fastest growing population in the world. Not quite, but one of the largest and faster growing populations out there. And is India now the largest populated country in the world? I think they surpassed China last year. In any case, you can see the potential incentives there, but I think Bessent's point is a salient one. Like,
yes, by the way.
It is. Okay,
Yeah.
I was correct for once. It's a salient one, right? You have a war going on your doorstep. You have a big push from the United States to, fund that war better, beef up NATO, and in the meantime, you are inking a trade deal with a country who has, under no uncertain terms, propped up the Russian government to, again, are they fully propping up the Russian government by buying their oil? No, of course not. They have multiple of the funding sources, but how does that exactly jive with voters? How do people feel about that? I think it's an interesting question, but ultimately, whether it's this story or the news story we covered last week with, ties increasing between China and Canada, that is the risk that we run in the United States of this combative stance we have on trade. Is the European Union, India, both felt probably threatened from the U.S. stance on trade, from us swinging our weight around, and said, okay, if that trade relationship is going to be volatile for the foreseeable future, where do I replace that with in order to make sure that my companies who employ the majority of my people have somebody to sell their goods to?
Right. The deglobalization and then, other nations teaming up together to avoid U.S. volatility. It seems like that's part of it here. I love the mother of all deals things. It seems like ripping out a page of Trump's book. That was the European Commissioner, President Ursula von der Leyen, coming up with that quote. It seems like every deal now needs a little one-liner with it.
Big, beautiful bill, the OBA, the mother of all deals. Yeah, it does seem that way a bit. Gold continues to be in the news as the dollar sinks to a new 4-month low. Gold recently soared above $5,000 an ounce, perhaps a bit related here with the U.S. dollar today moving lower against the euro, lower against the Japanese yen, lower against the pound, and up against the Australian dollar. So there's that. But generally, the U.S. dollar moving lower pretty substantially as the Fed meeting comes into focus, and perhaps some pressure from this European Union-Indian trade deal as well. Again, the relationship between the dollar and gold is not one which is unique to the United States. You are seeing gold appreciate in every major currency out there, so that piece isn't unique. But the U.S. dollar has certainly weakened pretty substantially against, for instance, the euro over the course of the last year and a half, as well as baskets of other currencies. And at this point, the dollar against the euro is trading at the lowest level it has now since July of 2021. So that's again, a pretty significant move, and certainly makes American manufactured goods look more attractive. But honestly, we're just not the manufacturing powerhouse that we were 60 years ago. Maybe this moves us in the right direction on that combined.
Quite a year for commodities over the last year or two.
Quick break. We're going to have Wall Street watching the trivia winner when we return.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your days snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Social Security and Medicare are oftentimes lumped together, but may be handled separately. And depending on your strategy, they could shape your entire retirement plan. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Choosing when to start Social Security has many effects, including determining the amount of guaranteed income you receive each month. Medicare decisions go beyond coverage as they can impact premiums, out-of-pocket costs, and access to providers throughout retirement. Our new guide is called How to Apply for Social Security and Medicare. It will help you learn how these decisions may fit together and how to take the right steps at the right time to build a secure retirement plan. Call us at 800-393-4001 to get your copy of How to Apply for Social Security and Medicare. That's 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And today we're talking about last-minute nursing home lessons that can help save your assets. Todd, more and more people are providing in-home care for their loved ones. Is there anything a care provider can do that would be beneficial to them or the family?
So if you're already providing care for an individual at home, and more people, as you said, are in fact doing that, the best thing to do is to set up a personal care contract, right? A personal care contract is something that allows you to get paid by your family member, and as long as you report it on your income tax return and prepare a personal care contract, make sure you get an elder law lawyer to help you prepare that contract because it's got to be done right. But if you do those two things, get the contract and provide the care and put the income on your income tax return, the transfers are non-disqualifying transfers. So even if you don't make the 5 years, those dollars that you're moving will not need to be returned and they will be protected. Also, while you're doing that, set up the trust and get the 5-year clock started. Put some assets in because you just never know if you're going to make it or not, and you would always want to have that 5-year clock running to protect your assets.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan. It's called Long-Term Care Planning for Procrastinators. You can call 866-848-5699, or you can simply request it from their website, legalexchangeshow.com. Once again, simply call 866-848-5699, or get it from their website at legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are mixed as Wall Street prepares for a Fed meeting with the decision on interest rates tomorrow afternoon. In addition to big tech earnings, however, the big news on the day is negatively impacting several health insurance stocks. Right now, the Dow is down 0.6% or 296 points. S&P 500 up 0.5% or 36 points higher. NASDAQ now up over 1% or 238 points. Russell 2000 edging higher, mostly flat. 10-year Treasury yield flat as well at 4.217%. And crude oil up nearly 2% higher, trading at $61.78 a barrel. Well, the Trump administration floated a proposal to hold Medicare rates almost flat next year, far less than expectations of a 4 to 6% increase. UnitedHealth shares are sinking 18%, Humana stock tumbling 19% now, and CVS Health shares are down by 12%. Again, all on that news. Meanwhile, General Motors reported a $3.3 billion quarterly loss, but still reported better than expected earnings for the previous quarter. The automaker also issued a 2026 outlook that exceeded analyst forecasts. Furthermore, GM upped its quarterly dividend by 20% and announced a $6 billion buyback program. GM stock rallying 9%. Elsewhere, Boeing reported stronger than expected fourth quarter revenue and said it was making solid progress with its turnaround plan. Boeing shares are now up 1% on the day. American Airlines down by 3% after the carrier took a $325 million revenue hit from the government shutdown. However, American still posted quarterly revenue growth and issued an encouraging annual outlook. And UPS announced it will eliminate an additional 30,000 operational jobs as it winds down its partnership with Amazon. The cuts come after the company eliminated 48,000 jobs in 2025. UPS shares are rising almost 5%. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question. Michael Jackson suffered serious scalp burns after his hair caught fire while filming a commercial for which company? That would be Pepsi. Colin from Weymouth, Mass. is our winner today, taking home a Financial Exchange Show t-shirt, and we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
This is just a pretty wild market day. I know we're doing radio right now, so you trying to follow this along is difficult, but there's something out there you can go look at, an S&P 500 map where it just kind of gives you a graphical view of what's up and what's down and how big are the companies that are up or down for the day. And oftentimes you see, most stuff in the red or most stuff in the green. It is just all over the board today, with many companies down by more than 1%, many other companies up by more than 1%. Hence why you've got the weird stuff going on with NASDAQ up a full percentage point today and Dow down 0.5%. But a pretty big moving day, and not atypical for a busy earnings week either, but just a fascinating map to look at today. Healthy 401ks need strong public markets. It's a piece out today from Barron's and speaks about the looming changes. Looming gives a negative connotation. It's not all negative, but the pending changes to 401ks and what they might look like and how they are going to add complexity for investors that are out there. So, Paul, maybe we can cover them together. There's obviously been already substantial changes to things like contribution limits, Roth 401ks, who can contribute to what. But we're now talking about some other stuff when it comes to how 401ks work. Help me summarize kind of what's being tossed out there as potential new additions and complexities when it comes to people's primary retirement savings vehicle in the U.S.
Yeah, so the biggest thing is going to be the addition of privately held investments within a 401k plan. So for most listeners out there that do participate in a 401k plan, many are by default slotted into these target date funds, which will have a certain year that is predicated on when you anticipate you will retire. So for a younger worker just starting out today, it may be 2070 or 2065 or something like that. Or for someone who's on the precipice of retirement, it may be that they are in the 2025 or the 2030 fund. And the way that those funds work, they are a mixture of, very broadly speaking, stocks and bonds. all of those instruments within them are publicly held companies as well as publicly issued debt that you, myself, Tucker, anybody could go out and buy shares in these types of companies, particularly on the equity side of things. Private equity and venture capital and some of these other areas are the privatized sides of the market, where companies like OpenAI is a purely private company, or you have SpaceX, a purely private company that even if I wanted to buy in, I'm not able to. And so what they're talking about here is this shift in terms of the Invest Act that was passed on December 11th to allow for investors to get exposure to those private markets. What are the benefits? Sometimes they can have stronger returns than U.S. public markets. What are the drawbacks? Lesser liquidity, oftentimes higher cost. And so all of that needs to be sorted out. For years, it's just been the public markets that 401ks have access to. Now they're gradually opening the door into private markets.
The other thing that we didn't cover as part of these changes, there's also been the kind of tacit approval of annuities to be placed into 401k plans as well. I think the main point that I take away is we're talking about adding some very complex assets into the average American's 401k plan. And I say the average American because the average American probably doesn't pay a ton of close attention to the day-to-day investments in their 401k plan. The average American probably hasn't read a prospectus before or would know where to go to look at the expense ratio on a fund. Again, I'm not saying that everybody falls into this camp. I'm talking about the average person. And so I still have some very major questions about the introduction of these products into these plans, because if you're going to add complexity, then somebody's going to need to help guide those people through that added complexity. I mean, today, Paul, without any of these assets in there, how often do you meet with people who lack a fundamental understanding of why one fund in their 401k has performed better than another?
Oh, I would say the vast overwhelming majority.
What percentage of them actually know what percentage of their 401k is invested in stocks versus bonds?
10, 20%. Yeah.
What portion of them know what they're paying for their 401k?
Jeez, that's
3%?
Yeah, even less.
So in spite of all of these disclosures that the government requires these companies to provide to their participants, in both of our experiences, very few people have the answers to some very basic questions. And so when you add the complexity of something like private equity into a 401k, I'm not saying don't do it. I'm merely saying plan for some real confusion and misstep if it's not rolled out properly. If you have a 401k, a 403b, 457, there's so many different types of these plans that are out there depending on whether you work in the private sector, the public sector, a nonprofit. In any case, you're likely faced with dozens of decisions every year on these retirement plans. And I will, throw my hand up there to say that even myself in my early career working in finance, I wasn't sure which type of account I should be contributing to at that stage of life. And it can have a meaningful impact on your financial future. If you have questions about your retirement plan and how to be using it most efficiently for the stage of life that you're in, give the folks at Armstrong Advisory Group a call. We sit down with our clients. We work with them directly on customizing their overall financial strategy for their financial future. The number is 800-393-4001. Again, that's the Armstrong Advisory Group at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Zillow is out with their most buyer-friendly markets of 2026. They've got 10 of them: Indianapolis, Atlanta, Charlotte, Jacksonville, Oklahoma City, Memphis, Detroit, Miami, Tampa, Pittsburgh. Here is my question, Paul. Is this worthy of any more attention than when Jim Cramer comes out with his stock picks on CNBC?
Ooh, shots fired at Cramer there.
Yeah.
I would say probably slightly more weight that I put on the Zillow buyers
than the Cramer.
Yeah.
I was asking the question, not answering it. You fired the shots there.
No, it's.
I mean, this to me sounds much like any major portfolio manager or CNBC personality host talking up their book and throwing shots in the dark about what's going to be best performing. I don't know that Zillow has any proven track record of telling me that these are the places to buy in 2026.
They can use at least some of the data within their site on the price adjustments. So they're saying, hey, most buyer-friendly markets, and they're monitoring the monthly change. And it's pretty obvious that if you look at inventory, like we've done often on this show, that Florida is a pretty good place to look, just because there's been a abundance of inventory dumped onto Florida in terms of new construction and things like that. So that, to me, to see 3 or 4 of them within the top 10 makes a whole lot of sense. Little bit surprised to not see a little bit more of the Sunbelt presence in the top 10 area here, but also a little blown away on some of these typical home value numbers that they're using here. Some seem low. I'm sure these are medians, but the Boston one in particular, which somehow slots in the top 50 spot at number 43 at $706,000. I'm not really sure where they're pulling that number from. It seems a little low.
Let's take a quick break. When we come back, a bit of Stack Roulette is next on the Financial Exchange.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Hi, this is Chuck Zada from the Armstrong Advisory Group. One of the biggest mistakes you can make as you prepare for retirement is missing important deadlines for Social Security and Medicare. You can apply for Social Security up to 4 months before you want benefits to begin. Medicare has a 7-month enrollment window around your 65th birthday. Missing that window may cause coverage delays. Something else to consider is that you don't have to start them at the same time. You can enroll in Medicare at 65, but delay Social Security to increase your monthly benefit. Learn more in our new guide called How to Apply for Social Security and Medicare. To get your free copy, call us today at 800-393-4001. That's 800-393-4001, or request the guide online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your days snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined. For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
The more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Be sure to subscribe to our YouTube page where you'll find full shows of the Financial Exchange and any noteworthy discussions we had. You'll get caught up on anything and everything you might have missed right here on the Financial Exchange Radio Network. Just search the Financial Exchange on YouTube and be sure to hit that subscribe button.
Elon Musk was out with a comment a few weeks ago, and everybody since then has picked on him and picked it apart, and I tend to agree. But he predicted that AI will create such abundance that in a decade or two, people won't need to bother saving for retirement. And Allison Schrager from Bloomberg picks apart that argument entirely, and I agree. I think that while AI could create abundance, I don't think it will be equally distributed. I think that the idea that it will definitively create a whole bunch of abundance and productivity is a very big question. And so I discount the entire idea. But it got me thinking, and we've had this debate before, but is there any technological innovation that has happened in history that has changed lives for people to the extent that Elon Musk is talking about? Right? Because that's what he's arguing is, hey, you living today won't need to save for retirement because of this new technology. And I'm trying to think if is there anything out there. The closest that I could come to was the electric grid. Imagine for a minute you're born in 1880.
Right.
You spend the first 20 to 30 years of your life operating by candlelight, hauling ice from the local pond in order to, cool your food.
Yep.
And by the time you're 40, you can turn a switch and turn on the lights in your home.
That's a big one.
Like the internet's not bigger than that. The mobile phone's not bigger than that. Refrigeration, electricity. There's likely nothing that changed the lives of a single generation more than the electric grid. And even that, I think, is less extreme than what Elon Musk is talking about.
Maybe the proliferation of like grocery store markets and like food abundance and it being a situation where you don't have to be so overly concerned of harvesting what you have for food consumption.
But even that didn't take place on a single generation.
No, it was very much fragmented in terms of its implementation over decades, probably, where it just became a spot where anybody could walk into a store to get food in the United States.
Interesting thought exercise. Again, I think Elon Musk's comments are, like many of them, crazy and not realistic. But interesting thought exercise. If you guys have any ideas of any single innovation that changed the lives of a single generation, meaning it had to be a big innovation and happen quickly. Text the show at 617-362-1385 with your ideas, but I couldn't come up with anything better than that one.
Vehicles or flight?
It's flight, maybe. Yeah, no, but you could still travel across the globe prior to flight.
Just very slowly.
It just was very slow. It's not as though people had never been to France until flights came along.
Sure.
So, I don't know. I can't think of anything. What do you have for us for Stack Roulette?
Not nearly as thought-provoking as that exercise here. Brian Nicola is the CEO of Starbucks. Thank you.
Like 5 cents, but spelled differently.
Nicole. I really don't like that, the way it's spelled.
Yeah. You should let him know.
Take that, Brian.
My biggest bone to pick with you is I dislike the way you spell your last name.
Yeah.
He spent his first full calendar year on the job trying to improve the experience in Starbucks stores, outfitting them with ceramic mugs, replacing faulty power outlets, rewriting the whole guidebook in terms of how baristas greet and serve customers, all sorts of other different condiment bars being added back in, and now he is trying to install more comfortable seating across Starbucks all over the place and trying to offer more superior customer service. The question will become, does it matter? Does this, is this too far gone, the transformation that Starbucks has undergone, where it has become far more transactional than I think the founder, Howard Schultz, would like to have seen over, his tenure stepping away from the company, where it is much more about quickly getting your drink and getting out of there and less focus on the experiential atmosphere that he kind of built the brand.
I don't have an answer. I mean, Tucker, you probably frequent Starbucks a little bit more often than I do. I go pretty often.
I go a few times a month, I'd say.
What has been a noticeable difference in your opinion?
I would say just more welcoming baristas. Kind of
yes,
like what
you have
Paul,
noticed
yeah,
it.
Oh, yeah, definitely friendlier. And
that was a bit jarring the first time I walked in, like in a positive way. But I walked in, grabbed my order, and they're like, "Hey, thank you, welcome, come on in."
Right.
I think for a net positive, I do think that there was a little bit of it does seem pretty fake, but prior to was there an attitude of like, okay, I'm just here to pick up my order and there's no friendly wait staff, it's not my neighborhood coffee shop? Yeah, I think so, and maybe this takes a small step to improve that.
And I think those baristas, to be fair, were quite overwhelmed by the proliferation of mobile orders. It's not something that's new to Starbucks, but it just seems like it's become larger and larger of the experience is that mobile order setup, and so the frustration with all the drinks that they have to produce there.
Sorry, go ahead, Tom.
No, I was going to say I do want to visit a store in the afternoon because I primarily, when I do go, it is early in the morning, obviously. But I'm curious to see what it looks like in the afternoon because they are going back to that coffee house vibe where they actually give you a ceramic mug and whatnot. You can sit down and have a coffee. I just want to see if people are actually doing that.
I have my doubts.
Yeah, me too.
Also, nobody orders hot coffee at Starbucks anymore.
Oh, I do.
I do too, but
yeah, you're right.
You go in there, especially in the afternoon when it's all teenagers.
Yeah.
It's giant pink.
It's all those fancy drinks.
Yeah. So I don't know. I think nothing is going to revolutionize Starbucks quite the way that their mobile app did when they were really first to market, not only among coffee chains but among fast service restaurants generally, and that was a huge change for their business. To the positive for the financials anyway. Everybody's caught up now, and so I think these are more changes around the edges, but clearly a necessity and potential positive. We've got to go. That's all the time we have from the Financial Exchange. As we close in on the noon hour, markets remain in mixed territory with the NASDAQ leading the way up. We've got a Fed meeting tomorrow, so tune in. Have a great rest of your day, folks.